welcome to TCM Education. My name is Michael. I'm the analyst and counter designer here on the channel, and we want to welcome you. Let's talk about 4 trades that made a difference for day traders that actually had, I think, most of us in day trading really got excited about Friday's trading day. Finally, S&P developed some character. We didn't dive or move straight down and created a bell flag or anything like that. So the trading day was still tough, but at least there was some range. For the first time in more than a month and a half, the S&P really grew up in range, and that's important because if the S&P continues to trade this 1%, $6, sometimes even 0.5%, like $3 intraday range, it doesn't help our day trading strategies. Having said that, we can't complain because many stocks do work outside of the span of the S&P, especially those that don't belong to this. We had plenty of those great movers lately. Okay, so not going to talk about the IPOs today or CRCL. Let's move into the mainstream and talk about Amazon. Earnings failed to impress. There is this cloud computing segment that really failed versus Google and versus Microsoft. And here we are with a 7 to 8% gap down, and the price action in the open was very wild and not very easy to understand. So there was no gap down, so no continuation down. The move higher also failed. So what happened in the open? Anybody that banked on a gap down and go? No. Anybody that banked on a fast reversal got something going, but not for a long period. And then suddenly things become more clear. If you observe the chart, you see this top here, and once it turned around, and the entry short could have been either at the VWAP or at I'm pointing at the 219, just because it's a round number. It's really hard to when the trade is really live to understand where exactly is the trade. But if you use the round number, at least you have a very tight stop loss. That's 70 cents. Only 70 cents here on this trade. So 70 cents on $200 is 1/3 of 1%. So that's very little risk. 1/3 of 1%. Let's call it 0.5%. And then it doesn't matter if you take a $10,000 position or a $50,000 position, because trust me, I mean, anybody that trades Amazon knows that $50,000 position is nothing, definitely not a $10,000 position. So if you take a $50,000 position here short, you risk 1%, that's $500, 0.5% is $250. So you risk basically $250 on a $50,000 position. That's very little risk. And now, what you end up with? First of all, the trade works to perfection. So it breaks immediately down and continues to lag until it reaches some support at, let's call it 213, reverses the dollar. So you end up with a trade from 219 to 214. So let's call it a $4 trade on a 50 cent. $4 trade on a 70 cent risk. That's 5 to 1. I think, yeah, that's 5 to 1. 5 to 1. So you risk here. In this case, if my example is 250, you end up with 1250. Again, nothing big because here at the low there was a big time reversal. Okay, so that was a full 1%. Actually, yeah, full 1% reversal that definitely eats into your profits when let's face it, the range of Amazon is not that large. So the range between the highs and the lows is $8, but it's only 4% on a $200 stock. So 4% is good, but it's not great. Great is 7, 8, 10% range. We'll see in a minute what a big range can do in a stock. So was it clear to short it? I think it was. Was it like a profitable trade? Not really, according to the potential, but at least it's the trade spent in the money 4 hours. It was, unfortunate that it reversed late in the day, and it could have easily been with the market moving lower, 210 close instead of 240, and then it would have been a monster trade, like 5% intraday risking 0.5%. That's 10 to 1. That's what you want to get on Amazon's earnings, and 10 to 1 is 2,500, and 2,500 is definitely a payday. Okay, let's move to number 2. Another stock that is basic. Anybody that's following our channel knows that this stock is on our watch list on a daily basis, and should have been on everybody's watch list on Friday, because Robinhood had earnings. There were some, great earnings in some segments of the business. Robinhood's crypto revenue nearly doubles, and the revenue doubles because they're making lots of money on crypto on top of other things. And of course, when a stock is up from 30 to 110 in 5 months, so it nearly quadruples in 5 months, great stuff is happening. It's about time, because it took like 4 years for Robinhood to come back from its demise after the IPO, back to its original IPO price, which was 85 or 90, I don't remember, maybe a little bit less, and now it's probably running free, and the rest of the online brokers are doing very well as well. So what about why the move down on earnings? I don't know. There were some background noises with the banks trying to limit the exposure of Robinhood to the Bitcoin market. Again, I'm not an analyst. I don't know what happened on earnings. Maybe it's profit taking. The bottom line is that if you were a believer, and it wasn't very easy to make this make out of this trade. I have to agree on that, because somebody wrote to me, it's impossible to take this trade. The trend is lower, and you're right. He was right. The trend is lower, but there is a double bottom here. Again, not very easy to observe. There's a double bottom at 94. Sorry, that's 93.4. So it's below 93.50. But there is what resembles a double bottom. Now, again, if you are looking at the daily chart, no doubt this is one of the strongest performers in the Nasdaq this year. Maybe in the league of Palantir, and very few stocks are in this unique league. Palantir, as much as I remember 2 stocks, because they are Oracle, Palantir, and Robinhood. Maybe they are better stocks, but they are not in the league of these stocks, like stocks that our market value is above 100 billion. What is the market value actually here? In Robinhood, I don't have it in front of me. Market cap 88 billion. So again, nearing 100 billion. That's a monster. Okay, so what happened here? Where do you enter? I mean, if you get catch the double bottom, you're a great trader. Very tough to operate this double bottom. Now, if you understand, however, the daily of Robinhood, and any move lower over the last 5 or 6 months have been a success. Buying cheap in Robinhood was a recipe for day trading success. We had plenty of examples day trading Robinhood on this channel. Again, great day trading stock. I agree that this reversal was tough. The other option was to buy the breakout at 97, which is nearly $3 above. But take a look at this. When I meant that you know, there are trades and there are trades. Take a look at this move. Okay, so it's ugly. My drawing is not that great, but that's a $10 move. Hold on a second. That's a 10% intraday move from 94 to 104. Again, okay, 95 to 101, maybe 105. But bottom line is that that's what you want to see on earnings. Huge intraday range. The range percentage for this stock was nearly 11%, while for Amazon, if you remember, it was 4%. So that's double the potential to have great intraday moves, double plus the potential to have great intraday moves. And again, you cannot expect such a move, which is nearly a 10% intraday move, but you know, this is why Robinhood is doing as well as it's doing, and it didn't even get accepted into the S&P 500. Which I think, in retrospect, talking about the S&P 500, it's a joke. It's no longer an S&P 500. It's an S&P 25. I mean, the rest of the stocks below the 25 level have near zero representations. Why call it S&P 500? It's meaningless. It's a lie. But that's I'm not going to complain here. So anyway, that's this trade. Of course, there is plenty of other entries, and people will mention this bull flag formation, which is fine. And, but I'm trying to figure out and to try to explain that there are entries that there are great entries. Now, if you're a day trader and you have one great entry per day, that's it. And you cannot, let's say, you cannot have one great entry per day. One great entry per week can feed you the whole week. I mean, this trade can feed you a week. This is a 10% intraday move. So if your position is $10,000, that's a grand. But if you have a real position like $50,000, you do the math. And again, it's not a big deal to have a $50,000 position here. It's how much is it? It's a 500 share position. Yeah, 500. Yeah, $50,000. That's 500 share or 600, 530 share position, whatever. Okay, let's move on. We have plenty of three additionals. Actually, I want to show two and then another one. That's the easiest trade. Friday, a gap up and go. Now, many people talk about these gap up and go scenarios, which are very tough to observe. And again, how many gap up and go can you trade in the morning session? One. You cannot trade more than one. Let's face it. So, where is your focus? On Amazon, on this, or on this stock ATEC, which is I think a biotech company. Biotech/technology company. So again, I'm just making a point. you don't like Amazon for whatever reason, and you're lucky, because this is only luck. I mean, who's even watching ATEC? The volume was great, but and the gap up obviously amazing. So that's why you watch, because it's immediately on the screeners after this nearly 15% gap up, and it moves like lightning from 12 to nearly 14. And if you have patience here, you end up with a huge win. So it's all about patience, plenty of entry points, great trade. Again, but this is more like a lucky factor. How do you take this trade when you have Apple, Amazon, Robinhood, and the other IPO that was booming, FIG, and so many stocks? Focusing on ATEC is nearly impossible. Again, it's a learning curve. What do you need to do to take this type of trade? Nothing. Just observe it, and again, you need to take relatively big risk when you're trading in the first minutes, but the risk reward is amazing. When trades are working, and you take care of business if the trades are not working. But if they're working, you don't need to take care of business. Just do nothing, let the trade ride, and if it ends up closing near the highs of the day, then you're lucky, because here you have a nearly 20% intraday move from 12 to 14. That's 20% intraday move. And when I said that you only need one 10% intraday move per week, here you have a 20% intraday move. Again, I have to say that the probability of taking this type of a trade is very, very low. Okay, let's move to number 4, BE. BE is Bloom Energy. Now, what happened here? Why I'm bringing up this trade? Because again, the daily is very strong. Let's observe the daily. Take a look at the daily chart. So the daily chart is showing a stock that's booming because of the energy boom. They are in the clean energy or new energy business, and obviously a stock to watch. I mean, this stock has great trading day. It's a great day trading stock. The volume is amazing, almost no spreads. It's not. I'm observing now that it's not short. I was short. It's shorter, but anyway, the trade that I'm showing is a long placement. I don't care about short, but in this case, I'm surprised. Anyway, let's take a look. So the stock dives on earnings. I don't know the reason why. I'm not going to read about it right now. It's a waste of time. So the stock dives on earnings, but the buyers are coming in like crazy in the first minutes. So instead of being a gap down and go, it's a gap down and straight up. So it almost closes the gap. So again, if you make a mistake here, that's why I'm talking about, making a mistake in the first minutes can be very costly. You have to be like lightning fast, because if you make a mistake here and you short it, you end up with a, I don't know, 10% loss in a minute. That's super ugly. Okay, and you don't recover from this type of things. Not all your Friday trading day is destroyed right there in the first minutes. So again, if you make mistakes in the first minutes, make them small if possible, and try to eliminate it. But if there are mistakes, they need to be very, very small. So this is a prone, a gap down, and such a big reversal is prone to a mistake, big mistake. Anyway, what happens here is that if you do observe the trend, which is clearly higher, so you look at the stock is down 5%, but the 5% is lying, because that's because of the gap. The intraday price action is amazing up. So the reversal here, this is clearly a reversal play, which takes, let's see how many minutes to develop. 1, 2, 3, 4, 5, 6, 18 minutes. Those are 3-minute bars. So that's 18 minutes, you can see 3-minute bars. 18 minutes to take this trade. And the risk on the trade, you can see that's pretty much 1%, which is what I suggest will be your maximum loss on any trade. And in this case, obviously the stock is on earnings. It's wild. Look at the reward. So you enter at 35, where you end up with a $3 move, another 10%. So when I said 1%, 10% intraday move per week, I didn't mean 3 per day. One was 10. This is the 10. Yeah, it was 10% in Robinhood, 20% in ATEC, 10% here in BE. Again, when I say 10%, obviously I'm joking, because the whole move is 10%, but you're not going to be able to take 10% out of it. Take half of it, it's still great. Okay, so because it went up and down and sideways, so if you have a move like here at the highs, that's a different story. So that's a great pick. Those and I'm sure that it was tough to take this trade, but all 10% trades are tough to trade. The market is not going to give you free money, so you need to take great trades and smart trades in order to deliver 10% intraday move, no question about that. So those are the 4 that I want to show. Just one more minute here with another stock that was interesting to watch. Let's take a look at SATS. EchoStar. So what happened with EchoStar? So in this case, a clear, let's call it straightforward type of trade. The stock gets down on earnings. They failed with all their earnings metrics, but we don't need to worry about that, because the stock is down big time, double digits. It's on every screener. This stock has great liquidity, a bit spready, but the volume was 8 million shares plus. Anyway, so what's happening here? So there are a couple of ways to trade here. Assuming we're not going to go for the, again, get down and go. Who's watching? Nobody's watching. But then there is this clear bell flag formation that's forming at the lows, but instead of breaking down, it reverses. So now when it reverses, you know that you can do a reversal trade. And this is one reversal trade option at 27.40. The risk here is way above our limit. It's nearly 2%. But if you wait, look what happens in 2 hours later during lunch. So it does another reversal, and this time the risk is anywhere between 27.40 and 27.60. That's only 20 cents. So that's less than 1%. Now, it delivers the move down to the 26, which is only 40 cents. But 40 cents here is 1.5%, nearly 2%. I'm just making a point because what's important here is to observe this amazing consolidation and very little risk. Anytime you have very little risk on a trade, you do the trade. And of course, it's the right stock. And it is short, so it's shortable, no spreads, very little risk, you do the trade. And in this case, you don't get a lot of profits here, okay? So it went more than I just saw. It went from 27.40 to 26, that's $1.40, risking 20. 1? I said 3 to 1. I don't know, my math wasn't that good. Anyway, let's take a look at the outcome. Wasn't that the outcome overall wasn't that great? Came back to the viewer. But what I'm pointing here, and that's why I wanted to spend another couple of minutes, is this setup. Because this setup, with very little risk, can easily lead. This is now a 10 to 1 type of a trade. If it works, breaks under the lows, which it did. But if you look at the potential here, it breaks here under actually delivered really fake, ugly, fake. Wow, what a fake. No, anyway, 26 was clear support. So it's not a fake. It didn't break 26. Bottom line, the potential here was great. Okay, so you take a very little risk type of trade. In this case, less than 1%, and the liquidity is perfect. So again, you can choose your position: $10,000, $50,000, whatever. That's a private business. But what's not private is to manage this stock in order to get the most out of it. How do you get the most out of it? You just let it do its job. In this case, it didn't do its job perfect, but it can do its job easily the next time. Okay, so basically, it was definitely amazing to see that it hits 26, and I believe that had it been maybe a different scenario, the break under 26 can lead the stock down another 2-3% and make it this trade also. Okay, that's what I had for you guys today. 4+1 day trading scenarios that are repeatable, easy to learn from, not that easy to implement, but that's day trading. You know, you want to take great trades. They're not easy to implement. I'm just bringing this one, this example, because this one is really easy to implement. And I hope that nobody will disagree with that in the description. Sorry, in the or through my email response or your email response. Okay, guys, thanks a lot for being here. Do like and subscribe to our channel. Nearly 3 months on air. By the end of this month, we will be 3 months on air, so thank you. Do like and subscribe, and we'll see you hopefully in the next video.